Good morning, everyone. Share the screen. A warm welcome to today's webinar on 150 Days of Tariffs India's Shift from Shock to Strategy, hosted by Brickwork Ratings. I'm Vikrant Chaturvedi, Associate Director Research, and I'm pleased to moderate this insightful session. Joining me are two of our analysts, Girish Basantani and Manasvi Joshi, who will guide this discussion forward. Together, we'll explore the US tariffs imposed since August 2025, which have reshaped India-US trade dynamics. But first, a quick intro to Brickwork Ratings. We are one of India's leading credit rating agencies accredited by the RBI and recognized by SEBI. We deliver independent credit rating, research, and risk assessment across banking, financial services, infrastructure, and corporates. Here's what we'll cover in today's session. Firstly, timelines and impacts. We'll walk through key events like how exports dropped sharply, jobs took a hit in labor heavy sectors such as textiles, gems, and the varying effects across product categories. Next, we'll understand what are the India's response to this. So, in terms of diversifying trade to over 50 new markets, support for MSMEs, boost in export financing, and talks for bilateral deals. Finally, we'll understand the recent trends and outlook. So exports to the US bounced back 22.6% year on year to 6.98 billion in November 2025 after the early dips. Even with a record $41.7 billion trade deficit in October due to gold imports and tariffs. After our speaker's presentation, we'll jump into an interactive Q&A. So feel free to submit your questions anytime. Now let's get started. Manasvi, over to you for your insights.
Thank you, Vikrant. Good morning, everyone. Thank you for joining us today for this insightful webinar. Let's dive right into our first slide, which provides information on the key timelines of the US tariffs on India. 2025 marked a turbulent year in India-US trade relations, highlighted by the escalating tariffs imposed by the US on Indian imports. In April 2025, the US implemented initial reciprocal tariffs on India. Subsequently, on 9th April 2025, the country paused these nation specific tariffs in order to facilitate negotiations, thus providing India with an opportunity for discussions. However, tensions escalated when the US tariffs sharply increased. On 30th July 2025, President Trump announced a 25% tariff effective 7th of August, citing penalties for India's ongoing imports of Russian oil. By 27th of August, an additional 25% tariff was imposed, resulting in a total tariff rate of 50% on Indian goods. Then, in November 2025, the US president rolled back tariffs on over 200 food items such as tea, coffee, etc. The US tariffs on India hit the 150-day mark on 4th of January 2026. Now, moving on to the next slide. Let us now have a look at the overview of the US tariffs on Indian exports. The US remains one of India's largest trading partners. It accounted for about 19.8% of India's total trade in 2024-25. Consequently, any alterations in US trade policy hold substantial implications for the Indian economy and its export sectors. The primary factors driving these tariffs are trade imbalances and US concerns over India's continued purchases of the Russian oil. While sectors like pharma, smartphones, and energy were exempted, several export oriented industries were impacted. Gems and jewelry, chemicals, and textiles faced major losses due to reduced competitiveness in the US market. Consequently, India experienced a significant decline in its exports to the US, declining from USD 8.8 billion in May 2025 to USD 6.3 billion in October 2025. However, after 2 months of decline, India's exports to the US jumped by around 22.6% in November 2025, reaching about USD 7 billion. Part of this rebound came from a low base of last year, that is of November 2024, when trade was impacted because of the Red Sea crisis. As logistics improved, exports recovered. More importantly, growth came from tariff exempt or less affected sectors. Electronics, engineering goods, and pharma all performed strongly. Factors leading to growth included strong US holiday demand, government support through PLI incentives, and a weaker rupee that improved price competitiveness. This rebound matters. A sustained increase like this can add meaningfully to the GDP and improve credit outlooks for export focused MSMEs. However, certain risks still remain, such as future tariff changes, political shifts in the US, and global uncertainty. Next slide.
Manasvi, before we go to the next slide, I have a question for you here.
Yes.
What does the export drop from $8.8 billion to 6.3 billion really mean for the Indian economy with these US tariffs?
That's a good question, Vikrant. The fall in exports clearly shows how US tariffs have affected India's economy. Higher tariffs, especially the 50% rate, have made Indian products more expensive and less competitive. As a result, companies are losing orders, jobs are at risk, and industrial growth has slowed. It also shows the danger of relying too much on the US market and why India needs to expand other markets. I hope that addresses your question.
Yes, Manasvi, thank you.
Now, let us proceed to the next slide. US tariffs have significantly diminished the competitiveness of India's export oriented sectors. Chemicals, gems and jewelry, textiles, and shrimp sectors have been significantly impacted. Indian exporters are encountering increased cost as compared to their counterparts in countries with lower tariff rates. Currently, Indian goods are subject to a 50% tariff in stark contrast to Vietnam's 10 to 25% tariffs and Bangladesh's duty free access through preferential agreements. This disparity severely undermines India's competitiveness, potentially leading to a reduced market share in the US. It has also resulted in a drop in investments. The uncertainty created by frequent and steep tariff hikes has made investors increasingly cautious, particularly in sectors that are heavily dependent on the US market. Over time, this slowdown in investment could limit job creation and slow long term industrial growth in US exposed sectors. The tariff shock has also resulted in a significant decline in employment, particularly within small and medium enterprises that rely heavily on exports. Industries like textiles and garments, gems and jewelry, marine products have experienced significant job losses, reduced working hours, increased wage pressures as a consequence of declining orders from the US. Next slide.
Manasvi, before we go to the next slide, I have another question for you on
Okay.
this slide. So India is at a tariff disadvantage versus countries like Vietnam, Bangladesh. What key steps can we take to get our exports competitive again and rebuild the investor confidence?
That's an interesting question, Vikrant. So, in order to improve export competitiveness and rebuild investor confidence, India should focus on diversifying markets beyond the US. At the same time, strong government support through incentives, PLI schemes, and better infrastructure can help lower cost for exporters. And trade agreements can also help Indian products compete better with countries such as Vietnam and Bangladesh that already enjoy lower tariffs. So I hope I have answered your question.
Yes, Manasvi, thank you so much.
So now moving on to the next slide. India's exports are affected under three categories. First, that is tariff free products. Second, those that are subject to uniform global tariffs. And third, those that face punitive 50% tariffs. The first category, tariff free products, experienced the most significant decline. In spite of being exempt from the US tariffs, two key sectors, pharma and smartphones, have seen a substantial drop in export performance. In September 2025, exports from these sectors fell by around 47%. Weak US demand and industry buildup caused contractions across these sectors. Indirect tariff spillover from components and related goods also eroded competitiveness. Next, the second category is uniform tariff sectors. This category saw a milder fall. Exports declined by around 16.7% in September 2025. This decline seems to be more closely associated with a slowdown in industrial activity in the US rather than a decline in India's competitive edge, as all global suppliers face similar tariff conditions. The last category, which involves India specific tariffs, has experienced significant challenges. Labor intensive sectors, including machinery, agri foods, chemicals, gems and jewelry textiles, witnessed a substantial decline of 33% in exports during the same period in September 2025. Next slide. Now, let's discuss how Indian exporters are navigating new markets amid tariff shocks. India's exporters have effectively tapped new markets in order to offset losses from steep US tariffs imposed in 2025. Following the tariff hikes, India diversified exports to alternative regions and sectors. This strategic pivot mitigates risk and enhances India's export sustainability amid ongoing US tariff challenges. Some sectors are still heavily dependent on the US, thus, further diversification and market development are critical for sustained export resilience. Early shifts to multiple global markets will help reduce the dependence on the US. Thus, diversification is critical to sustaining India's export growth as US tariffs remain high and market uncertainties persist. Next slide.
Manasvi, before we go to the next slide, I have one more question for you here.
Yes.
With US tariffs up, which regions look like best new spots for Indian exporters to pivot to?
That's a very relevant question. Indian exporters are now looking at Asia, Europe, and the Middle East as good alternatives. For example, exports of marine products are growing rapidly in countries such as China, Vietnam, and Thailand. And at the same time, Europe and Middle East are becoming important markets for textiles, chemicals, and manufactured goods. I hope that addresses your question.
Yes, Manasvi, thank you so much.
Thank you. With that, I'll hand over to my colleague Girish to take this discussion forward.
Thank you, Manasvi, and good morning, everyone. Let's turn our attention to this slide, where we look at how is India responding to US tariffs in a smart and balanced way, instead of reacting defensively. India is using this movement to strengthen export system and reduce long-term risk. The first pillar is trade diversification. India is fast-tracking free trade agreements, so it is not overly dependent on the US. Major deals like India-UK trade agreement open doors to large European markets. In addition, recent deal with Australia scrapped tariffs on all Indian exports. These agreements give Indian exporters lower duties, access to new market and consumers. Second, India is still talking to US. Trade discussions are still active with hopes of bilateral deal. Some US tariffs are linked to India's Russian oil purchases. India has chosen to protect the energy security while staying open to compromise where mutual benefit exists. Third is domestic support. MSMEs, which account for about 45% of exports, are getting cheaper credit, duty refunds, and emergency funding. These steps help protect nearly 10 million jobs. Sectors like textile, gems and jewelry, leather also receiving targeted support. Finally, India is expanding into new markets. Deeper trade ties with UAE, EU, Japan, Korea, Australia could add another 30 to 40 billion export by 2027. Overall, this strategy could recover up to 70% of export losses from US tariffs. Next slide, please.
Girish, before we go to the next slide, I would like you to answer a question.
Sure.
So, how is the government protecting small businesses and MSMEs from these tariff hits on the export?
Yeah, that's very relevant question in this scenario. Um, I can tell you government is taking proactive steps where Indian government has introduced targeted relief measures around approximately 7,000 to 25,000 crore to protect these MSME from steep US tariffs. The support is focused more on the sectors such as textiles, gems and jewelry, leather, and some engineering goods, which are vulnerable. And these support measures aim to ease liquidity pressures, reduce borrowing costs for them, and promote market diversification to safeguard employment in these export-oriented sector, which employ millions of people. So this is how government is trying to safeguard Indian exporters and MSME in general.
Thank you, Girish.
Sure. So moving on to next slide now. This slide brings some good news. US removed extra tariffs on more than 200 agriculture products from India. These goods are either not produced in adequate quantities in America or depend on climatic conditions that US cannot replicate. This is meaningful relief for farmers and exporters, even though agriculture forms small share of total exports. The products covered include tea, coffee, spices, some vegetables, and some fertilizers. Earlier, these goods faced duties as high as 10 to 25%, making Indian products less competitive compared to suppliers from other countries like Brazil or Vietnam. With tariff removed, Indian exporter now again have a fair chance here. In numbers, these exemptions protect around 1 billion USD of export each year. This is roughly around 40% of India's agriculture export to the US. Exporters could also see better profit margin, lower cost, higher sales volumes. Large US retailer may also increase sourcing from India for premium products like organic spices or Darjeeling tea. This move also sends a positive diplomatic signal. It supports ongoing trade talks, where India uses strong services trade surplus with US as an advantage. On the ground, impact can be bigger. Higher rural income, stronger cooperatives, and benefits for nearly 5 million farmers. Next slide, please. So this slide highlights a challenge. India trade deficit record hit a record high of 41.7 billion in October 2025. This shows while some tariff relief helped, but bigger trade pressures remain. The main reason was surge in gold imports, which nearly tripled to around 14.7 billion. Festive demand, RBI gold purchases, and investor hedging played all the role in this surge. This alone widened the deficit sharply. At the same time, export to the US fell around 9% because of high tariffs on steel and textiles. Weaker US demand, higher shipping costs also added to the surge. Agriculture tariff relief helped, but agriculture is only a small part of total export. Meanwhile, imports of electronics, pharma inputs, and precious metals stayed strong as industrial activity picked up. The bright spot was services. Services export grew 12% to around 38.5 billion, led by IT and digital services. This helped keep current account in check, deficit under control at about 1.8% of GDP. For policymakers and analysts, this deficit signals sends a signal for action for better export incentive, reduce coal imports, stronger domestic manufacturing through PLI schemes. For businesses and lenders, it raises a concern about currency volatility, MSME cash flow. The message here is, however, not pessimism, but urgency, where merchandise exports must catch up to the services growth to restore balance. Finally, moving to the next slide. This slide talks what is outlook ahead. India-US trade talks are progressing, but first phase deadline was missed. India chosen not to rush. Instead, India is choosing to protect sensitive sectors, farmers, fishermen, MSMEs, so that no deal is harming the domestic interest. This cautious approach aligns with India's self-reliance strategy. Studies suggest that full tariff escalation could reduce GDP by up to 0.5%. So avoiding a bad deal is critical. At the same time, India is open to balanced outcomes, such as moderate tariff cuts on IT, chemicals, and manufacturing goods, along with expanded exemptions. Both sides are negotiating hard. US wants more access to dairy market, with India is resisting, while India meanwhile want fair treatment in autos and industrial goods. If talks succeed, bilateral trade could grow significantly by 2028, supporting exports, jobs, and investor confidence. Broader impact here could be stability, less currency pressure, better credit ratings, and stronger business sentiment. So the key takeaway is India is playing a long game here by combining patience, diversification, selective openness. Also, it is positioning itself as a reliable trade partner in the complex global economy. With that, we are done with this slide number 10 for outlook.
So, Girish, before we conclude, I have a question for you. So, what's holding up a full India-US trade deal? What are the biggest trade roadblocks that we see in this deal?
Yeah, so this is very a burning topic, and everyone is waiting for this deal to happen. I mean, it's going around the market. There are some talks from the ministry that deal will happen very soon, but there are the key roadblocks, as you mentioned, in India, US deal. These roadblocks arise from differences over tariffs and market access, with US pushing for lower tariffs on farm and industrial products, while India is seeking to protect the local producer. Talks also slowed by non-tariff barriers such as disagreement on digital trade rules such as data localization and unresolved issues around visas for Indian professionals. So these gaps, along with domestic political pressure in both countries, continue to delay this agreement. So these are the like key roadblocks, which is hampering. Kind of a talks are stalled and it's not moving in a way the stakeholders will want to see.
Thank you, Girish. Now we will take some of the questions that we received during registration process. The first question is, are tariffs reinforcing market concentration or enabling new entrants and MSMEs? Girish, can you take this question?
Yeah, Vikrant, so very interesting question. So let me tell you, tariffs have mixed effects across sectors. In capital and technology incentive industry, they often strengthen large firms that better manage higher cost and regulatory complexity. While smaller firms struggle in some consumer goods and light manufacturing sector, tariff can help MSMEs by providing temporary protection and stable demand in government compliance environment. However, tariffs only support competition when combined with access to credit, standards, and logistics. Otherwise, they mainly benefit large firms. So this is how the situation might arise for MSMEs and large firms.
Thank you, Girish. And next question for Manasvi. What research gaps remain in assessing tariff spillovers across employment, productivity, and innovation?
Okay, so key research gaps still remain. There is little long term firm level data on how tariffs affect job quality. Productivity effects are still unclear as it is hard to separate efficiency gains from higher cost passed on. The impact of tariffs on innovation is also poorly understood, and spillover effects across value chains and regions are not well mapped. Overall, better data and closer collaboration between researchers, industry, and policymakers are needed to inform effective policy.
Thank you, Manasvi. So let's just wait for a couple of minutes in case anybody has any question, we can answer them. Looks like we've already covered all the burning questions during our presentation. So uh, thank you all for your participation. Uh, we look forward to seeing you in our future events. Thank you so much.
Thank you, everyone.
Thank you, everyone.